What if I told you the biggest illusion in history isn't a magic trick, it's your money? Every government says their currency is safe. Every central banker swears the system is sound, but behind every promise hides the same deception. Because the United States doesn't just print money, it creates it by buying its own debt. Think about that. The government borrows from itself using money it just made up, and somehow that's what the world calls finance. It's the most brilliant lie ever told, and every dollar in your pocket is part of it. Before we go deeper, pause for a second. Where are you watching from, and what time is it there? Tell me in the comments. It's wild to see how far these untold stories travel, and if you want more content that reveals the hidden machinery of money and power, make sure you're subscribed. Now, let's break down the scam that changed everything, how the most powerful country on earth built its empire on a financial illusion, and why it's starting to crack right now. When people hear government debt, they imagine investors in foreign countries buying US bonds, maybe China, or pension funds or giant banks. That's the story everyone knows. But it's only half true. Because the real buyer, the one keeping the whole system alive, is America itself. The government borrows, and its own central bank quietly buys the IOUs. It's like lending yourself money, calling it revenue, and pretending it's sustainable. Most people never see it. They hear about stimulus, monetary policy, or quantitative easing, and tune out because it sounds too complex to matter. But this is what decides how much your savings are worth, how far your paycheck goes, and why every year things cost a little more. The illusion is simple. The system looks healthy from the outside, but underneath, it's feeding on itself. The Treasury issues bonds, the Federal Reserve buys them with freshly created money, and the world keeps believing that's normal. Because as long as people believe it works, the trick continues. But here's the question nobody asks. What happens when belief runs out? Every illusion needs a setup, and this one begins with a simple problem. Washington spends way more than it earns. Taxes never cover it all. Wars, welfare, bailouts, infrastructure, the bill always comes due. So the Treasury does what any spender would do. It borrows. It creates IOUs called bonds, official promises to pay back money later with interest. Usually, investors line up to buy them. Foreign governments, pension funds, big banks, they see treasuries as safe. But sometimes that confidence fades. Sometimes interest rates rise too fast. Sometimes no one wants more US debt. That's when the Federal Reserve enters the stage. The Fed isn't part of Congress, yet it's tied to it like a shadow. And when the Treasury needs buyers, the Fed becomes one. But here's the twist. The Fed doesn't use existing money. It creates new dollars out of thin air and uses them to buy the government's debt. No factory, no labor, no savings. Just digital entries on a balance sheet that instantly turn debt into spendable cash. The Treasury issues the bond, the Fed buys the bond, and suddenly money exists that didn't exist yesterday. It looks clean, legal, even boring. But it's the foundation of the entire illusion, a feedback loop where the government funds itself with money it manufactures. And most people have no idea it happens every single day. But that's just the opening act, because once the trick works, they can't stop performing it. Here's where the illusion turns into a trick. Because when the Federal Reserve starts buying those government bonds, America isn't borrowing from investors anymore. It's borrowing from itself. Think about that for a second. The Treasury prints an IOU promising to repay $1 billion. The Fed creates $1 billion new dollars out of nothing and buys it. Now both sides claim success. The Treasury has funding, the Fed has an asset, and on paper, the books balance. But in reality, nothing real was earned, nothing produced, just one arm of government lending fake money to the other. It's like paying off your credit card with another credit card you invented. And yet, this system props up everything. Wall Street profits, housing prices, even the value of the dollar in your wallet. It's the quiet engine behind every boom and every bailout. During the 2008 crisis, this trick kept the financial world from collapsing. During the 2020 pandemic, it doubled in size. The Fed's balance sheet exploded from under $1 trillion to nearly $9 trillion. Most of it, money created to buy the government's own debt. They call it quantitative easing. Sounds harmless, but what it really means is printing trillions, pushing them into the system, and hoping no one asks where they came from. It's the most sophisticated money printer ever built, and the longer it runs, the harder it is to stop. But what happens when the illusion grows too big to hide? That's when the real cracks begin to show.
So how does the illusion actually work? It's simpler and far scarier than most realize.
Step 1. Congress decides to spend. Infrastructure, defense, bailouts, the money isn't there, so the Treasury issues bonds, IOUs that say, we'll pay later with interest. Step 2. The Federal Reserve creates new money out of thin air. Not by printing paper, but by typing numbers into a computer. Billions appear on a screen within seconds. Step 3. The Fed uses that new money to buy the Treasury's bonds. No investors, no savings, just one arm of the government lending to the other with cash it just invented. And that's it. The loop is complete. Debt becomes money, money becomes debt. The illusion lives. From the outside, it looks legitimate, with hearings, charts, and fancy terms like open market operations. But beneath the jargon, it's the same trick, turning IOUs into dollars again and again. Every time the Fed supports the economy, it's really printing belief, not value. Every time Congress overspends, the Fed quietly makes it possible. It's a partnership built on illusion and held together by trust. But once that trust begins to fade, so does the magic. Because no illusion lasts forever, especially once the crowd starts seeing the wires. Every magic trick works until it must grow bigger to stay believable. That's exactly what happened. In 2008, the system cracked. Banks failed, credit froze, panic spread. The Fed stepped in, buying toxic assets and printing money it didn't have. Its balance sheet exploded from under $1 trillion to over $4 trillion. Crisis averted, for the moment. But once the trick worked, they couldn't stop. Every new emergency demanded a bigger illusion. Then came 2020. Lockdowns, market panic, trillions spent overnight. The Treasury issued endless bonds, and the Fed bought them all, creating nearly $9 trillion out of nothing. No savings, no gold, just digits on a screen. For a while, it felt like a miracle. Stocks soared, housing boomed, and politicians bragged about saving the economy. But every printed dollar weakened the ones before it. Soon, prices exploded. Groceries, gas, rent, everything. They called it transitory, but deep down, everyone knew you can't print trillions from nowhere and expect nothing to break. The illusion had grown too big to hide. And when magic scales beyond control, it stops being illusion. It becomes madness. You might not see the bond trick, but you feel it every day. Your paycheck buys less. Your rent climbs faster than your raise. Groceries that once filled a cart now fill a bag. That's not inflation. That's quiet theft. When the government prints money to pay its bills, it isn't creating wealth. It's redistributing it. Each new dollar steals a little value from the ones in your wallet. Your savings lose power, so the system can survive. And here's the twist. The new money doesn't reach everyone equally. It flows first to the powerful. Banks, hedge funds, corporations. They get it before prices rise, buying assets that inflate long before your income does. By the time it reaches you, everything already costs more. That's why the rich keep winning, while the middle class sinks. It's not free markets. It's financial engineering disguised as policy. Politicians love it. They can spend without taxing, promise without paying, and voters barely notice until the bill hits the checkout counter. This system rewards debt, punishes saving, and turns speculation into strategy. Because when money can be made endlessly, those closest to the printer always win. It's unfair, unstable, and cracking. And the illusion doesn't stop at America's borders, because the rest of the world has been forced to play along, and now they're starting to fight back. For decades, the world played along with America's financial illusion. Every nation needed dollars for oil, trade, and reserves, so they bought U.S. debt and funded the system. It worked as long as the dollar seemed untouchable. But belief is fragile, and now that faith is breaking. China is cutting its bond holdings. Russia built its own payment network. BRICS nations trade in gold and local currencies. They've realized the truth. When one country can print infinite money to fund itself, everyone else pays the price. America's power turned into a weapon. Sanctions, global debt, and control through currency. Now nations are quietly backing away, hoarding gold, forming alliances, and building systems that don't rely on the dollar. The empire of paper is running out of believers. And history shows what happens next. Trust fades first, trade slows, and debt becomes unbearable. That's where the U.S. stands today, still powerful, but running on confidence that's wearing thin. Because when faith goes, the currency goes with it. Every illusion works until the crowd stops clapping, and the bond trick is no different. The US can create money, buy its own debt, and call it stability. But the whole system runs on one fragile thing: belief. Belief that the dollar will still buy something tomorrow. Belief that debt can grow forever. Belief that printing value out of nothing is normal. Once that belief cracks, the magic fades fast. Money isn't wealth, it's a story. A story people agree to believe in until they don't. We've seen this before. Rome debased its silver until faith collapsed. Britain devalued the pound and lost its empire. Now America repeats the pattern, only in digital form. When trust dies, money becomes paper, code, promises. Markets panic, banks freeze, the press spins harder, and everyone realizes their wealth was borrowed from the future. Illusions don't end with explosions. They end in silence. A moment when people stare at their money and ask, is this still real? Because when a nation believes it can buy itself forever, it isn't financing prosperity, it's mortgaging faith. And faith, once broken, is the one currency no central bank can ever print again. In the end, every empire learns the same truth. Money is only as real as the belief behind it. The dollar, the pound, the denarius all began as promises and all ended as warnings. America's bond trick worked because the world believed in the illusion. The Fed could create, the Treasury could spend, and everyone played along because it felt safe. But faith is the most fragile currency of all. And now, as savings shrink, prices surge, and nations turn away from the dollar, that faith is cracking. The greatest illusion in history, the one we started with, is beginning to fade. So before the magic ends, ask yourself, when belief dies, what will your money be worth? If you want to see what comes after the illusion, subscribe. The next chapter begins there.